Welcome back, better investors, to another episode here on the BI Academy channel. And today we're going to talk about how to invest to create generational wealth and to leave a legacy. So we see here that we're going to take $100 and we're going to be dividing that into 4 different assets here, okay? So we have stocks, we have cryptocurrency, we have ads being advertisement, and we also have savings. What can this do for us? These different things can generate more income. They allow for us to put our dollars to work rather than have those dollars sit there and devalue over time, because we understand inflation. We have financial education on this channel, and that's what we're here for, to continue to build on that. So we're going to go through a 1, 2, and 3-step process of how you can invest to create generational wealth and leave a legacy. So the $100 being divided $25 a piece to stocks, cryptocurrency, advertisement, and savings, then go on to produce even more income and cash for us in the future. So looking at step number 2, we see the stocks. What do stocks create? They create cash flow and they can create gains, especially when we're talking about value stocks. Most value stocks, let's take in a stock, for example, being Verizon, pays a dividend. Cryptocurrency has yield farming and also has staking. Okay, so we're not going to get into depths of what is the difference between the two, but understand that those are passive income strategies using cryptocurrency. It can create cash flow and you have capital gains, because just like the stocks, the cryptocurrency itself, that project can increase in value in terms of the token price. We have advertisement. Advertisement equals sales. At least we hope that that's what it does. We hope that our ads impact the crowd and audience that we're targeting, and we have customers come from that. And then that leads to cash flow, because we have people buying those products, and that can be reoccurring. Also, too, it's going to lead to gains. Now, how can this lead to gains? Because it now makes the product or service that we have become even more valuable once people try it and the marketplace starts to like that product and it starts to be inside of demand. Or it could be a service as well. Now, we also have savings. Savings, when put inside the right vehicle, can produce cash flow and gains, because our savings is growing over time, and if we have it inside of a place where it can compound, we are most certainly going to see exponential gains on our savings. All right, so we move down here now to step number 3. Cash flow equals freedom, gains equals net worth. We need to combine the two to become wealthy, okay? So the formula goes like this: cash flow plus equity, also known as gains, equals wealth. Our wealth helps us reach our goals. Our goals help us achieve our dreams. Our dreams eventually will lead us to live the lifestyle and the life that we want to live, as well as leave the legacy behind that we want to leave for us to be remembered by. And that is the generational wealth aspect of it. So starting with $100, you have to think small, and then you can scale anything. This could be $1,000. This could be $100,000, right? It's up to you to see it for what it is and to bring it into fruition. I wanted to start with $100 because a lot of times people say it takes money to make money, and that might be true a lot of times, and sometimes you'll be surprised where it can even not take money to make money. Take advertisement for an example. You can pay for advertisement, or you can promote and advertise yourself. You can have friends and family who advertise you to other people for free by sharing your posts and content that you post online, and that can potentially bring you customers. So it doesn't always take money to make money, but I wanted to show that if we do take the route of using money to make more money, it does not take a lot of money to make a lot of money. It takes big thinking. We have to take small sums, and $100 is something that pretty much anybody can come across. We have to start taking our smaller sums of money and learning to turn them into larger sums of money. And we do that by being diligent and taking care of a few things so that we can have many moving forward. $100 here spread out went into 4 different things that created more cash flow and more gains, more growth on our dollars. And then from there, what is it essentially buying us? It's buying us freedom, and it's buying us the net worth that we want to have to live the lifestyle we want to have. And it's producing that cash flow and equity, making us wealthier. If we can get our dollars to do more than one thing, instead of being treadmill coming in and out, If we can get our dollars to recycle themselves and put them into vehicles where they produce more dollars, and we can see that dollar that we invested back plus more tenfold, we can become wealthier and we can work less because our money is working more. So this is how you can invest to create generational wealth and leave a legacy. It really all starts with diversification. From the time that we had the $100, we didn't just take it and put it into one thing. We divided it into 4 different things that can give us similar outcomes. In this case, they can even give us the same outcome, but in a different way. And that's what we want. We want to diversify so not all of our eggs are in one basket, but more importantly, so that when one thing isn't doing so good, that doesn't necessarily mean that everything is doing bad. Okay, when we don't diversify, everything can go wrong or right at the same time. Now, Robert Kiyosaki says something very interesting. He said the rich don't diversify. And I started to understand what that meant when I went on my investment journey. He was saying that if you have your money spread too thin, you're not going to be able to really get the gains and take advantage of an opportunity like you want to. So it's important to understand market cycles and what's happening inside of the economy. We want to understand the world around us. That's what economics is. It's a study of the world around us. If you understand that the markets go through cycles and the economy itself goes through cycles, you can learn when to get in and out of the market and when is it a good time to be inside of a certain asset class versus another asset class. It's not that both of them won't do well. Sometimes it's just that one will do well before the other, and then maybe the other will do well while the other one isn't doing so hot anymore. So we can take stocks and crypto for an example. If stocks and crypto were to go down, maybe you don't need to advertise as much because people have less money in the economy. People are focused on things like food and bread. Maybe they're not focused on clothes and shoes, and that's the product or the service that you provide. What you could do is, you do know that the assets are down. Because people have less to invest, the asset prices are falling. Maybe you do less advertisement. You take that $25, divided it into 2, that would be $12.50. Where did it come from? All we did was reallocate $25 from advertisement, divided it into 2, putting $12.50 into one asset class being stocks, another asset class being cryptocurrency. Now let's say when the market goes back up, this is now giving us what? What do we know? More cash flow, more equity, okay? And so we're wealthier. We could take that and buy even more advertisement. And that's going to be at a time where people are feeling better. The economy's better and people are less afraid, which means that people are more willing to spend on things that they care less about. So you have to understand what's important to you, and also you have to understand to listen to what the market is telling you. The market can be irrational longer than you can be rational. So you have to understand that and know that it's not necessarily about our emotions, but the emotions of the market. Everybody has different emotions and everybody's buying and selling, which creates the chart that we see when we look at a market. And everything in itself, whether it has a chart or not, it can be documented, it can be made into a chart, and it is a market. Everything from corn, gasoline, stocks, crypto, you name it. It has some kind of a market, and the market is simply buyers and sellers trying to find an equilibrium to know what price to charge for a certain product or service. So what is the true price? What is the true cost of this good or service? Becoming a better investor and being a better investor is about learning how to find these prices even before the market finds equilibrium. Remember that none of what you hear on this channel is ever financial advice, and we are not financial advisors. What we do is educate you to make the best financial decision that you think is best for you and your family and the people that you love and care about. Better investments equals a better future, and until next time, I'll see you guys inside the next video.
You tryna stop the game, better luck stopping the train. This nation ain't free, they just took away the chains. I still see the sunshine standing in the rain. Reach for higher heights, you focus and elevate.